We're all fully aware that the insurance, the homeowner's insurance in Florida is absolutely through the ceiling. And you know what? I would even say everywhere else. I'm hearing it all over the country because so many people come to Florida from somewhere else. We have these discussions, and although not as bad as it is in Florida, there's still a lot of problems going on in other states as well. But Florida, the insurance crisis is hugely significant. So walking through that and looking for a solution, it got me thinking, and maybe some of you as well, is it time to consider self-insuring? So today we're going to talk about whether or not you should consider self-insuring. We're going to talk about the pros and cons, and maybe it's just an exercise for you to go through to see if it might be a good option for you. Now, before we dive into this, I just want to give a couple caveats. So first of all, you could be living in a HOA or a condo association where they are requiring you to get insurance. So if they're requiring you to get insurance and they're making you provide it, then you're kind of stuck. If you live there, then you have to abide by their rules if they're asking you for proof of it. So that's the first thing. And then secondly, if you have a loan on your property, you're going to be sort of stuck there as well, because if you have a mortgage, they're going to require you to have insurance on the home or the condo. So those would be two things that would kind of stop you dead in your tracks, that you wouldn't be able to consider self-insuring. But if you own your property outright, and keep in mind, it might be a situation where you did a HELOC, a home equity line of credit. So if you bought the property, you leveraged your house in Michigan, and you came down and you bought the condo cash, then you technically have purchased that cash. So that is not a mortgage. So keep that in mind as we talk through this. You know, being self-employed like I am as a real estate agent, I far prefer to pay cash for things. Not only because it's really hard for me to get a loan being self-employed. If you're self-employed, you've probably experienced that. You get hit all over the place with higher regulations and your interest rates even higher. So if you can go cash, it's always better to do it. But the other thing is, I used to always, when I would get a loan, back in the day when it was a lot easier for people that are self-employed, you always look at your mortgage as principal, interest, taxes, insurance. And I used to always say, I want principal and interest only. Taxes and insurance I will take care of, because I wanted to take that money that they were taking, the mortgage company, and doing whatever they wanted with it. I wanted to take that money and invest that money so that my money could make money for me, as opposed to giving it to the mortgage company so that they could make money essentially off my money. So there's a lot of reasons to be in control of your own money if you can manage it well. But that's one of the things, is just having control of your own cash is always a good thing. So if you manage your money well and you're in a low risk position with your property and you're considering self-insuring, then having that extra money will open up more cash flow for you. So that money, that $500 a month, that $800 a month, that money will be opened up for you to do what you want to do with it. Now, it would always be my suggestion that if you're going to self-insure, you've got to take at least half of what you were going to spend in insurance and put it in something so that it's earning money for you, because what you don't want to do is have that extra $500, $800 a month and go buy a Lamborghini. That is a bad idea. That is not managing your money well. But if you do manage your money well, and if you are in a low risk area, then it might be just a huge advantage to loosen up that cash flow, give you a little bit of breathing room. About 2 years ago in Southwest Florida, there was a monster hurricane, Hurricane Ian. So if you're familiar, which I'm sure you are, if you're considering Florida for a move, that was the biggest hurricane that we have ever had. The flooding was unbelievable. The wipeout of property was unbelievable. So let me tell you what I even learned in watching my own clients go through this. So there were so many people that thought they were properly insured. Let's say they had a house that they bought for $300,000 and then the house became worth $700,000 because prices went up everywhere. Yes, they adjusted their insurance up. Yes, they were paying the higher insurance because they wanted to make sure they were covered. Well, when the hurricane came through and they had very significant damage and their house was completely unlivable because there was 2 feet of water in it, what people discovered is that they were getting very, very little on the dollar. I mean, as low as sometimes 20% on the dollar. I can tell you story after story of folks who thought they were appropriately covered, and every excuse known to mankind was given to tell them why they were only going to get their, yes, to redo their roof, it was going to cost $70,000 for their tile roof, but they were only going to get $11,000 for it. Everything was getting depreciated. Everything. And I would say this to you, do this right now. If you live in Florida and you have not done this, just as an added protection to yourself, if you're going to keep your insurance, go through your house and video every single year. Put it in a file on your desktop, keep it. 2024, here's what the house looks like. Outside, inside, all your possessions, because that is going to be your only shot at getting anything on it. It's just, I saw people go through the worst experience of their life, losing their home, and then to top it off, they couldn't get anywhere close to the value. So many people displaced on Fort Myers Beach that had bought these cute little manufactured homes or cute little cottages from the 1970s, and they were living a wonderful life and planned to do it for the rest of their life. Well, when their property got demolished, those people that are literally sitting on property that's worth way over $1 million, way over $1 million, even with their little postage stamp that's remaining, those people couldn't get anywhere close to enough money to rebuild. And to top it off, they put in all these rules. The insurance companies, along with FEMA, I mean, I have to say, FEMA did the same thing. If you have more than 50% worth of damage, you have to completely take the property down and rebuild. You can't just start repairing. The rules they put in were so bad. And already to begin with, there are not enough workers in Southwest Florida because it's one of those areas that you've got a lot of wealth, but you don't have much in terms of middle class. You don't have the people there that can come in, especially with a hurricane of that magnitude, to come in and do repairs. And then you have the insurance company controlling everything, saying, well, I want 3 bids on the roof. Well, I want 3 bids on your obviously completely destroyed kitchen. You know, they start putting in all of these things. I know people, many people, that are 2 years out of this hurricane and they're still not back in their houses. Now, again, I want to say this. I'm talking about areas that are not going to be prone to hurricane damage. So inland a bit, or a condo that's inland and on the 2nd, 3rd, 4th floor. So if your thought process is, okay, that's the worst hurricane that we've had literally since biblical times in the area, if your thought process is, if I came out of that with just a little bit of damage, I don't ever want to deal with the insurance company again because I've been paying them thousands over thousands and they gave me pennies over pennies for my damage and I'm done with them, I'm going to chance it, then that might be something that works a little bit better for you, because if you had to pay for your kitchen anyway, or most of it, you might say, you know what, I don't want to go through the process of dealing with their red tape. I want to just take control of this for myself. All right, let's talk about the cons. If you're in an area that's prone to flooding, that's going to be a big problem for you because flooding is the worst. Flooding, it's really hard to come back from. Wind damage, you can do repairs usually, but flooding is a completely different story. So one thing is you want to make sure that if it's a home or a condo, you want to have impact resistant doors and windows, because then the likelihood of a catastrophic event hitting you personally inside your unit or inside your home is lesser. Is your roof newer? Is your roof tile. All of these things matter. Take a good hard look at your structure, at your property, and say, can this survive a hurricane, a Cat 4, a Cat 5, something along those lines. If it cannot, then you might want to consider doing the upgrades and then look at self-insuring. So the next one would be major expense, theoretically. So if you get some bad luck and you get hit really hard from a hurricane or a tropical storm, then that's going to be in your pocket. That's going to be coming out of your purse. So if you're prone to wind surge through a certain area and you're not there and you're not getting your hurricane shutters put up and all the windows blow out of your home, that's going to be a problem because that rain's going to go in as well. Now we have water to deal with. So the cons are obviously, if something does go wrong, if you roll the dice and it goes the wrong direction, then you're going to have huge out-of-pocket expenses that can you afford or can you not? So I guess tied into that, the other con would be you theoretically would burn through a whole lot of liquid funds. So if you set aside money for this scenario, it's possible that you'll burn through all of that. So again, this is only self-insure if you feel like you can do this. You can set the appropriate amount of money aside. And again, I'm going to say this again, insurance companies, it is so rare in my experience and what I've seen throughout these hurricanes through many years is that I don't think I've ever seen anybody get anywhere close to enough money. Almost everybody is putting a lot of their own money in anyway. And again, I just want to say this, make sure that you're in a safe position. Like I said, if you're in a condo and it's second, third, fourth floor and you have impact resistant windows and doors and there is no way a flood's not going to affect you. We'd all be gone if your fourth floor condo was underwater and you have impact resistant doors and windows and the roof is maintained by the community and you feel like there's just very little opportunity for something catastrophic to happen, think through that. Then you might be in a good position to self-insure. But keep in mind, there are some other things outside of a storm that you should consider, like slip and fall kind of thing. Let's say you're in a home and you have a beautiful pool deck and somebody comes over and, you know, they have a couple too many glasses of wine and they fall and they get hurt and they want to sue you. Well, if you don't have insurance to cover that, then that's also a problem. So there are other things to think about outside of just natural disasters when you're considering self-insuring. Now, if you made it this far in the video, I'm going to give you a little personal story of my own. I live about a mile from the bay, from Estero Bay. Now, if you're familiar with the area, if you got in a boat and you drove straight across Estero Bay, about 4 miles, you would be right in the sand at Fort Myers Beach. That was absolutely wiped out, completely. Underwater, still in bad shape. I am 4 miles across the bay from that spot. So my home got absolutely no damage. None. Can you believe that? So my house was built in the early 2000s. I have an asphalt shingle roof, so not tile. Now my roof was new, but still yet, I mean, the wind that came through there, I couldn't even believe that I didn't even have a shingle come up. So the roof was only about 6 months old. I did not lose any trees. I didn't lose my pool cage. My pool cage we had just put in. We got a new pool cage that was a panoramic screen. So we did some double securing. We added some wires to hold it down a little bit better because we weren't totally comfortable with, you know, we spent so much on that pool cage that we didn't want it to fly away in a big storm. We didn't even get a ripped screen. We got no water in our house. Now, houses in my neighborhood, some of them did get water. Many of them got pool cage damage, and by damage I mean the entire pool cage airlifted and flipped over. I mean major damage right down the street. So what was different for us? Well, one, we had maintained our property and we had just done major upgrades, and we took the extra money and said, we want to secure this. We want this to be the best that we can get it. So there was that. And then also, which I think is probably one of the most important things, especially for the flooding, our property sits at 19 feet elevation. So when you have, now you would drive through the community and say, there's no hills here, but just that little slope up that's almost, you don't see it. From the bay, if you were driving like this, it's the slightest upward sort of incline, but our neighborhood, that was enough that we didn't experience any flooding, and especially on my street. So my house sitting at 19 feet elevation, I didn't get a drop of water. The back of the neighborhood, which was sitting at about 16 feet elevation, some of those houses went underwater. So these are the things to think about. You might think, well, you know, I have to be 5 miles inland in order to consider self-insuring, which that would be definitely a safer proposal. But me being a mile from almost ground zero, right at the water, and I didn't get anything, that kind of tells you, if you prepare and if you pay attention on your purchase, if you're thinking about purchasing, that's why some of these things are so important, like the elevation certificate. So anyway, I hope that was helpful. I hope that gave you something to think about. Let me know your thoughts about self-insuring.